Hello and welcome to another update video about Ethereum. On the micro level, everything is playing out nicely at the moment. We seem to be in some kind of a wave 4 at the moment. It is a little unclear to me as to, so have we already is this already circle wave 4? With one more low to come in wave 5 of C. And bear in mind, we're now really diving into the detail here, into the micro count. And these, this can change quickly, but I want to give you my best view of the micro count here, which is difficult because the Ethereum move down looks very, very much like a choppy structure. To be honest, we exactly want to see that because choppiness means that price is coming down slowly. We have a lot of overlapping price action that's typically indicative for, a corrective move down. It's not impulsive down. That's what we want to see, because if this move down was impulsive, it would rather make the case for potentially a drop below support. But as you know, as long as we're holding $1,700, I see this yellow box as the jump off point for a third wave rally higher into the 2,500 plus area. So I'm happy with it being choppy. The downside of choppiness is that it is very hard to count the subwaves, and typically, and that's just what experience tells us, we try to count the subwaves very accurately, and it is a choppy move down. So we normally would call that an ending diagonal in this C wave here. Then sometimes, sometimes the last low doesn't happen. Sometimes the pullbacks are a little bit stronger and they might even touch above resistance. That's just sometimes what happens. You need to be aware of that. The cryptos like to be very choppy in corrections. It's good that that's the case because it allows us to identify corrections very easily, whereas the impulses are typically very aggressive and short. So it's very binary, you could say, very, very choppy and long corrections, whereas the impulses are very swift, short, strong, giving us good percentage gains, ideally. Okay, so the idea is still obviously that a wave 1 topped here on the 14th of July. I don't need to explain that anymore. That's clear. Yeah, we have a wave 1 top, and the idea is now that we're coming into this wave 2 in a correction. Again, we want to see that choppy price action. That's really good. The idea is that an A wave already bottomed on Monday, the 17th of July. The idea was that we get a B wave here to the upside. It was a very weak B wave, to be honest, here on the 20th of July, but it's valid. And then this could be a C wave down. Now, it is making lower lows, lower highs, absolutely what we want to see. We've been patient, we've been waiting for this decline, not a surprise to anyone here. The only thing is, I don't have a very good vision or visibility of the micro count. I mean, what I had as an idea was that we came down in a wave 1. Yeah, this was a wave 2 flat structure, very annoying here. Yeah, but it never broke resistance, so all fine. Nothing, no surprises. Now the idea would be that we're coming down in the third wave. Yeah, the third wave might be done already. This might be a fourth with one more low to come. The thing is, the third wave was a bit too short to be impulsive. So if it's a diagonal structure, which I think it would be because we haven't reached the 1.618 extension, it missed it by $10. Yes, I know that's not much, but that's sort of the stuff I'm watching out for. It would rather make the case for a count like that we are still in the third wave, but the third wave is doing an ABC structure. So basically here, A, B, C. If it's a B wave, it could go above resistance. Be aware of that, yeah? It can certainly go above resistance. It would not be a surprise. So that's what we need to, that's the stuff we need to prepare for in these diagonal structures. And then we could get another low in a C wave, another lower high, and another lower low. Again, those micro counts are not necessarily too predictive. I would still prefer one more low. And I don't think we can call it complete. If it rallies higher from here, it would be a rather incomplete downside structure. Again, it can always be a WXY. Then it could already be complete. But until I see a 5-wave move up, followed by a 3-wave pullback, I cannot confirm that a low is in place. So I stick to my plan. I explained that yesterday. I continue to scale in, keep spare cash for the confirmed trend reversal, and will then add to my position. But again, the overall upside scenario is going to be challenged significantly below $1,700. I think then it will fail. That's sort of here for me the invalidation point. It's not formal invalidation, but experience tells us that if price breaks in a 1-2 setup, because we see this as a so-called 1-2 setup, a wave 1 to the upside, 5-wave move, followed by a 3-wave pullback, we call that a wave 2 in this scenario. Such a 1-2 setup is typically failing below the 78.6 Fibonacci retracement level. But yeah, no change. I think the resistance is still something to watch out for. If this is a B wave, maybe I should add or increase resistance a little bit. Let's do that. We call it the B wave retracement, because it can then go easily all the way to up to 1888. That would so we've got 1877 and 1888 as key resistances. So let's keep that a little bit open. Let's leave it a little bit more space. It might very much touch the trend line again. If it's doing that, it would rather be a B wave. Things like that. If it does already like that, I would just take some profits personally, okay? Just to scale out when the market makes money available in the chop, and then just to buy back lower. So yeah, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.